This may take a moment, just one sec. Morning Philip, morning Ivan, morning everyone. I just gotta do the risk disclaimer thing and trying to find the file. Here we go. Make sure I don't get sued. Okay, that is number one. There's number two. Hi, Michael. Hello. How did you know my name? I'm live on TikTok as well, but TikTok's so weird. I hate it. Okay, let's begin analysis. This is gonna be me doing analysis live because I haven't done it this morning. I was away for the morning and then I didn't want to do it before non-farm payroll because non-farm payroll can be weird, so this is my first look at the charts. Start by getting rid of that stuff. Okay, we have an intermediate term high here inside this SIBI, which is also part of that inversion gap. Take this indicator off. We're approaching the equilibrium of the dealing range, so we'll probably get a poke above there, and then that'll give us indications if we're going to be weak, and it's going to give us premium sensitivity, or if it's going to want to keep pushing through. We'll just have to wait and see. For our basis, we've got a nice gap here. This is the real fair value gap. You might be wanting to think it's this. This is a doji candle. You ignore doji candles and gaps, and that's an inversion, and it stayed in the upper half, plus it's just worked off the consequent encroachment, so that's good. 25168.75. I'm going to mark that level out as a support level. I'll make it orange. Okay, now we've got this gap with its volume imbalance, and it stayed in the upper half. The bodies are staying in the upper quadrant and above that Friday discount wick, so definitely bullish. Let's look for a target then. That gap aligns with this mitigation block pretty well as well. So I'd probably assume it's going to return into this and then trade higher, most likely into this liquidity pool. But because it's an intermediate term high, it can also fall short of it. So you want to look at a low-hanging fruit objective as well, and that would be something like this. Alright, 15-minute chart. Classic buy day opportunities. Right there. In the morning, by glancing at it on my phone, I was looking for a lower price, but it's seeing support of this inefficiency here. Plus NFP is popped us up a little bit, so nothing but higher prices. I can't see us wanting to go down to this low. I mean, maybe, but I doubt it. I highly doubt it. Institutional order for entry drill. That's an indication of strength. This is an indication of nothing. That's not an indication of anything. And then 1 minute chart, we've got an upwards pre-market range. So here's my pre-market low, which I'm not going to say it's going to trade into this because I'm bullish. I don't want it to trade into that. I just want it to take off. And this is our pre-market high. It's not that I can't trade into the pre-market low, but I just wouldn't expect that to happen right after the open. It can take out the buy side and then go into the pre-market low, but I think it should just trade into the buy side first without even wanting anything to the downside. Okay, regular trading hours chart. We've got 414 closing price at 24,723.75. Just gonna make that red. And then we're trading at 25,221, so we've got a very large opening range gap. If you're on YouTube, like the stream, por favor. See that I'm multilingual. One is Zach. One of me. This is an intermediate term low. It's the first swing low that trades down into this gap here, so it's rebalanced this fair value gap. I don't want to see that returned into if we're bullish because it's got enough supporting levels, like an order block, this gap, the mitigation block, the high time frame, daily gap, and then this for it to trade higher without needing to get a larger retracement. So it can trade into the pre-market low. If it does, I would like a sweep and it leaves the intermediate term low and then go into the highs. Or it can go into the highs and then beyond the highs if it wants to go higher or then trade lower. To me, it's irrelevant. I don't really care what it does after the highs. Okay, we just got 5 minutes, 6 minutes until the open. Degenology, yo. 930 retracement and upside. How deep of a retracement are you thinking? Personally, I don't know. I'm just gonna let it happen. I don't think we're due for a huge retracement though. I need this opening range gap though. That's going to be the deciding factor for me. Because from the opening range gap, I'd like to see it, use the lower quadrant maybe, or fall short of it, and then use that to trade higher, without returning into any sell side objectives, just going into the upper quadrant of the opening range gap. Good morning. Is it true that if before 9:30 the opening is London high and lower taken, New York morning tends to be choppy? Well, that is a seek and destroy profile, or well, one of the things that can lead to a seek and destroy profile. It's not always the case though. Sometimes London is rebalancing inefficiencies, and then it's doing that in order for it to be traded above. So if London was like this was London, so yeah, and then it takes London low and London high, and then say it returns back to the middle of the range, and then you open, then yeah, you're probably due for a choppy session. But in this case, it's not like that. It's because London coming out of a tight range, there's relatively good highs here, and London's low, because we extend it if it's like this, because the entire price runs down here, is all it's doing is rebalancing the inefficiency. So although technically if you're looking at specific time windows, yeah, it's been manipulated. But because we're looking at, where the actual price runs, that's narrative and that's a bit of an experience thing, then I wouldn't even consider this a London low being taken. I would just think it's rebalancing that inefficiency and created an intermediate term low. That's what London did. And then now it's trading higher. So I don't consider the London low to have been taken yet. So for me, it's not a seek and destroy profile. If it was, I still trade it, I'm not gonna lie. I'll still trade. No problem. Okay, pre-market high looks really primed. If you really zoom in, it's kind of like a mini market maker model. This was the non-farm payroll candle. I know data highs and data lows. The thing is, if you're bullish, it's not going to return to a data low. I mean, it may for manipulation. I'm not ruling that out. So that's my data low. But off the open, I just want to see trade higher. After using an opening range gap quadrant, and then use that to trade higher. $25,000. That's too deep. I don't think it should go to 25,000. Well, no, I don't think it should go to 25,000. It's already done enough work lower here, and then now the 930 open volatility should just send it higher. I can't see anything else happening other than that. So, okay, regular trading hours. Let's get a grade level. Let's make it green. Wow, I didn't realize the lower quadrant was, or the upper quadrant was that far down. I would then probably assume it can take this low and still be bullish. It can take the pre-market low and still be bullish. And in the best case is it falls short of all of this and it just trades higher. Wait and see type scenario. I wouldn't want to trade this yet. I want to wait and see what it's going to do. Okay, select this low. What's ES up to? So that's a bullish SMT. Yeah, that was leading the race. I'm still bullish on the dollar from a daily point of view, and been playing out so far. Short term though, this is probably moving lower to take or retrade back into some kind of either the suspension block high or something in this. So that makes it low resistance. Thank you. Consequent encroachment of open range gap on end dog, just observing. Oh yeah. And it's on the Friday discount wick, so that's a very strong level. There's our midnight opening price. This is going to be a good indication of if we're in discount premium. You don't really want to be buying above this, and you don't want to be selling below it. We have multiple potential draws here. It's a difficult week because we've had non-farm payroll today and it's a Thursday, whereas normally we're meant to get it on Friday, but for some reason we got it on Thursday with the US government shutdown and then the reopen, and this being the first non-farm payroll in a while, and then the first time it's done on a Thursday. The weekly profile is just all over the place, so it makes it a lot harder to predict the engineering of each individual daily range when the entire week is it's irregular. You know? See this 5-minute candle closes. I like that it's leaving a long wick to the downside in this gap and mitigation block, and the body's getting pulled up. Not as high as I would have wanted it to close. probably better off waiting for the first presentation fair value gap. Well, definitely better off waiting for it. Okay. There's nothing to call here. It's in a bit of a 50-50. And there's no first presented fair value gap, so. When YM is strong, Nasdaq is weak, and ES is somewhere in the middle. Always. Always. We want to start seeing some inefficiencies get created, because without inefficiencies, you're really just in terrible price action. Just give me 2 seconds, I'm gonna go get my tea. I think my tea is ready. Pre-market low. I'm not certain yet. I'm just chilling. I don't want to predict it just because it's so wicky and so data low. Even that, I'm not trying to predict it yet. I want to see where it's willing to manipulate, if it's willing to manipulate at all. This may be enough for it to trade into the pre-market highs. I mean, if it takes this low, after already, taking out that low, which is the intermediate term low, and then working through the gap, closing above the consequent encroachment, then this should be enough work to trade higher. But it's so reluctant that if it trades below this low, it's almost certainly going into the data low. And then if it shows more weakness, then yeah, pre-market low. But until it's slow, it's slow. It does not need to move in a predictable manner here. When there's no fair value gaps in the first, well, just at all, then even in a low probability environment, you want to, sit on your hands a bit more. Let it form. Let it show you what it wants to do. Okay, we'll see where it's willing to close. Take this off. I'll fade it. Okay, that's not strong. Sorry, that's not weak enough to keep trading lower. Plus it's 3 drives. So because it's 3 drives and I want to see trade higher, but we have a data low, that to me is low probability because I can see it going in either direction. I can see it taking the data low, and then I can from there see it going into the pre-market low, and I can also see it going into the pre-market high. But then this may just be a repricing above midnight for a little bit of a premium before it goes lower. So low probability for me at the moment. Just to sit and wait. I'll do this because it's annoying to have to. There we go. It's the midnight opening fair value gap right now. See, this displacement can throw you off. If you can see it going both ways, just chill. Hopefully this gives us a first presented fair value gap, and then we can use that in combination with it rejecting from not even reaching into the pre-market, into the opening range gap, lower quadrant, upper quadrant, and then because it's rejected that, 3 drives inside the displacement from the 8:30 news, and if we can get a bullish first presentation fair value gap, that would be a good buy. That's if we get one. If it doesn't give us one, then it's not. Damn, there's a lot of people on TikTok. What's TikTok user? I think it's Velrek_trades. I don't know. I just figured out how to set it up, but I had to do it as a gaming a gaming stream. Otherwise, it wouldn't let me do it. And then it asked me to select the game, and I selected Black Ops 7. I don't know. It's such a weird app to stream on. It's just _Velric. That's my TikTok. Okay, that's not a first presented fair value gap because it's so small. You need something bigger, and ideally you want it to break some kind of high or low. This hasn't done that. So this, it can't qualify for a first presented fair value gap. It can qualify for a balanced price range. But I mean, technically, this entire area of price is balanced. So even that, I wouldn't consider it here unless we manipulate a high or low, and a significant one, not in that consolidation. I would want to see it, external manipulation. So like this data low, that's external enough that if we see a balanced price range and then it rejects, that would be strong enough to potentially consider buying it into the pre-market high. And the same goes with the pre-market high. If we get a balanced price range after we manipulate it, and we're expecting it to go lower because it's showing us weakness, then I can see it going lower. But if it's in a consolidation like this, you want to just chill. And you want to, you know, just chill. Still no first presented fair value gap. So you need inefficiencies. You can't trade without inefficiencies. Like you need them. It's non-negotiable. Look at this on a 5 minute. How ugly is that? 4 minute, 3 minute, 2 minute. It's just overlapping. It's barcoding. You don't want to be in that. Here we can probably get first presented fair value gap formed in. Hopefully, because that gives us something to work with. There's nothing to work with here. Let's see if we get one. Okay, first presented fair value gap. Plus, this is the displacement that breaks this high, which makes it a market structure shift. So, not predicting a direction, but we do have good buy side objectives and a good potential entry point if it's going to trade higher. But based on what we've seen, it's not a guaranteed market right now. It's how back and forth it is. It can go against you for no real reason when you're seeing characteristics like that. But we are coming into the 950 to 1010 macro. So this. I don't consider that inversion just yet because it's left a long wick. If it goes through a first presented fair value or any fair value gap or any PD array, and you're trying to consider if it's going to be an inversion, or you're expecting it to be an inversion, if it leaves a long wick on the opposite end and then it returns back towards it, but it still technically closes outside, normally you would say, well, it's an inversion because the body left the candle, or sorry, the PD array. If you're leaving a long wick and the body gets pulled up, don't call it an inversion yet. Wait for it to displace a little bit further. Like really confirm that it's going to be an inversion. Otherwise, you'll see candles that close a little bit beyond the PD array. You'll think it's an inversion, and you'll enter it like it's an inversion array, and you'll get just smoked. So you have to be conscious of wicks like that, because this is not an inversion yet. Data low is a very strong draw, and then the thingy high is also a strong draw. So to me, it's 50-50. See how slow it is? Trying to get caught up and trying to get a move here. You want speed. You want it to be one-sided. When there's draws both ways, it's going to behave like this. Okay, let's zoom in here. I want to see if this wick, if it can stay above the consequent encroachment of this wick, as it has been doing so far. So right now, it's traded down into the wick, but it's stayed above consequent encroachment. That's generally real good strength. But you have to wait for the candle to close, because it can wick down, go up, and you can think, oh, it's bullish, but then 10 seconds before it closes, it completely overlaps it, so you have to wait for the candle closure. Otherwise, you're going to be caught offside just constantly. My trading view just in-swiped all my drawings. Oh, I hate that. I had over 100 drawings in my trading view, including NDOGs and NWOGs, opening range gaps, opening prices, first presented fair value gaps of the month, of the week, and then mine also got deleted, so you're not alone. Now I only have 29 drawings and half of them are here. This is all I'm left with. I had them labeled and everything in object tree. Each new day opening gap for like the past 2 months was labeled. Same with the NWOGs, same with the opening range gaps. And that's all gone now. Okay, that's super strong from this. Let's go bullish order block. See what that does. It's not set up though, it's just one candlestick. Hello, Nehemiah. Hello, mate. Any predictions today, Nehemiah? What should we type in? If you there we go. Just joined from your posts. Tip nip. Which posts? Like which platform? Because I have 5 platforms. If you want to be profitable, that's a good idea. If you want to be cool. No prediction, just watching price. Same. Well, mostly same. Okay, displaces through this high. I'm gonna replace this. So it's still this mitigation block here at this high, so that can be revisited. And other than that, we're looking at this low hanging fruit objective, and this would be our liquidity pool. You got major liquidity building up, could it spike down to take out liquidity before going long? I would have want that to happen, but yeah, it's so unpredictable here because look how choppy it is. Could it spike down to take out liquidity before going long? I don't think so. I think we're already in a good enough spot for it to just trade higher, especially leaving these wicks down here on the 15-minute and then closing. You know, it meets the order block with the wicks. And this is also the 8:30 displacement candle, and then it trails all the way up here. And the next 15 minutes does the exact same thing. So you'd want to wait for this closing price. And you'd want to wait for this closing price. Ideally, it closes above this high, and then it's already done enough work on the mitigation block that I can just trade higher without taking out any lows. But again, not the best conditions to be wanting to trade in right now. Even if there's a setup, it's so back and forth that you don't want to be in this. Like, I wouldn't want to be in a position here. Because every couple seconds it's moving up, it's moving down, it's moving up, it's moving down. Yes, bro, have you ever traded gold? I traded gold a lot. I do trade gold, but the futures contract, so I don't trade XAU USD. I trade GCZ 2025, so this is a futures contract for gold. This is what I trade, but it's mainly like classic buy and sell day setups. So it's not swing trades, but day trades. I'm not scalping gold usually, or even taking like a short-term setup. It's usually for the majority of the daily range. TJG. I do trade forex as well, but I recently switched from NQ to gold. It's doing me good at the moment. Gold at the moment is amazing because it's moving so much every single day that if you're trading gold and you just get on side, you can just hold it for the rest of the daily range. And if you hold it until 4:14, the regular trading hour settlement price, like you're getting very close to the high of the day. Say if you're taking a buy setup, you're getting very close to the high of the day. If you can get in around London and then close it at the closing price. But right now it's New York, and I try not to touch it that much in New York because I'd rather be on the Nasdaq, if that makes sense. Why did you switch from NQ? NQ is really good right now. I've only ever traded London at the moment. The overlap's too volatile. Yeah, it is. Were you trading NQ futures and now you've gone to gold CFD? I like the movement on gold quick scalps. Honestly, for scalping, I prefer the Nasdaq, and then for longer trades, I still prefer the Nasdaq, but I'll still use gold as well. You were trading NQ CFD. You should try NQ futures. Futures, uh, I don't see the disadvantage between futures and CFD. I think futures just is way better. CFD, you're dealing with spread. You're dealing with brokers giving you messed up prices and extra slippage. There's a lot of annoying stuff. Traded it at the seconds chart this whole time. Really. Trade of it sucks. I can't use trade of it. It's so hard to do anything on the UI. As a broker, they're not bad. No brokers are good, but they're not that bad. It's just their platform sucks. Okay, look, where are the inefficiencies here? There's none, so you don't want to be really trying to force anything. There is an SMT here. We'll see if the rest of the macro can give us some displacement and then hopefully create inefficiencies, because right now it's not doing any of that. It's just very slow, very boring. And the 3 minute isn't bad with its order blocks, but it's not good either, because there's still no inefficiencies. that 15-minute candle close. It's good. I mean, this, it only has the mitigation box to support it. That's the only problem. So it's still 50-50 for me. I can't like sit here and give you a good direction like I normally do. Because I can say, oh, well, there's objectives to the upside, but it's a low probability environment. Even if the strength indications and the weakness indications that we generally use come up and, we're in bullish arrays and we have buy side objectives and it's displacing higher, even then, to say, oh, it's going to deliver higher now, when we're seeing, 30 minutes of only one inefficiency, that's just guessing. There's no room for guessing here. We don't guess. Okay, we're towards the end of the macro. We've seen our second fair value gap for the last 37 minutes. Alright. May as well get some gems since there's no real price action going on. This, I'm going to make it red, is our first presented SIBI. And this is our first presented BISI. You can use first presented of any PD array, and BISI and SIBI are subcategories of the same PD array, so you can still use these as different first presenteds. If the first presented is a breakaway gap, and it's the first presented SIBI and you're looking lower, obviously that's weak, and then the same applies vice versa for the first presented BISI. But again, this isn't a good session to trade. Like, we're seeing displacement now, but yeah, it's still only two inefficiencies. You need high probability price action, and this is not it. So stay out. Not that great. I just know someone's getting caught up in this chop. And now people are going to chase this move. It's not that unexpected because we had a very large range day for 3 days in a row. So we had Monday was very large range, Tuesday was very large range, and Wednesday was also very large range. If you go to the daily chart, we just measure the range on these days. Yesterday, 543 handles. Tuesday, 583 handles, and then Monday was like 629 handles. 3 really large range days. I mean, you're gonna have a choppy morning session. Okay, re-entry into the first presented SIBI, which is now an inversion PD array, by the way. Make that orange. If this was high probability price action, that would have been way faster. It would have been way faster. It should have just ran off from there. It shouldn't be hanging around. Especially when there's nothing to hang around in. It's a bounce price range, yes, but there's like if it's bearish, it's going to move lower, and it should have done it faster there. And if it's bullish, it should have done it faster as well because it just peaked a little bit below midnight. But obviously, there's no speed. It's not a session that you want to trade. Not yet, at least. Maybe by 10:30, the liquidity is going to be a lot more obvious, and hopefully the speed increases. But right now, not enough. Not popular enough to show on TikTok search. That's because I don't have any uploads on TikTok. Can it then invert towards the buy side? I mean, it can do anything right now, but what do I think is going buy side? No. Well, it's not a prediction, it's just you want to just chill. Will I be at the charts for PM? I don't know, maybe. Maybe. You need more Black Ops 7 kills. Use first fair value app again. Look, in the last 45 minutes, we've got 3 fair value gaps, plus this one, if you want to count it. This is about as low probability as it gets. Plus, it's just after non-farm payroll, and there's 3 large range of days prior to this. So, not ideal price action. Okay, will I be at the charts for PM? Maybe in the Discord. It won't be on YouTube. It'll be on Discord if I do. Do you want me to do PM? Yeah, I'll do PM in Discord then. Very dead session. I'm streaming, but like you shouldn't wanna trade this. Even if there's a setup, it's such high resistance that why would you want to be in it? You want to be in the low resistance environments where it's easy and it just runs to your objectives and it's fast and it's smooth and it's one-sided. And this is the opposite. And even if when you think it's about to displace, it just retraces that move. So then that's the definition of low probability price action, because it's creating balanced price. You want to see inefficient price where it's just moving and it's displacing and it leaves gaps and inefficiencies. But when it leaves them, and even if the wick comes up to the top again and then goes lower, that's still low probability, because unless it's an immediate rebalance, it's leaving this balanced. So again, you want to sit out. How many people do you think just got stopped out of their cells there? I'm betting a lot. Maybe if they were watching this stream. You have to know when it's not a high probability to put positions on. Yes, there's been a move, and yes, now there's another move. It's still not, not tradable. Unpredictable. Same story on all 3 indexes, and then I'll see the dollar. Dollar's inversely correlated to the Nasdaq, that's why we use it. And even this, that's trading higher, should be low resistance for NQ to trade lower. But NQ itself is just low probability. Today's lesson is how to sell in your hands. Yeah. Yeah. 100%. How to not blow your account when it's looking like it's about to move, but it's not going to move. look, what was the telltale sign that this is bad price action? No inefficiencies, and it's just overlapping with wicks. The bodies are sharing the previous body range. There's no displacement occurring that is strong. Like this was one large up close candle, yeah, but then what's it followed by? Slowness. When it's getting fast, you want to see it real fast, not slow. And wicks don't count speed. They can be indications of speed, but a wick itself is not speed. If you have a long wick on the end of a price that you don't want to see go on, so like this right now, that can be indicative of speed to the upside. But the wick itself, just because it moves fast, doesn't mean it's about to move and displace in a certain direction. Okay, we're going to end the stream because I don't want anyone to end up doing something that they shouldn't because of something that I say, so end it on TikTok first. Okay, thank you for watching. If you were here, yeah, bad price action. Hopefully you didn't try and get involved in it. No stream tomorrow. Tomorrow I'm doing back in Discord, and then next week it's going to be Monday, Wednesday, Thursday will be the live streams, just like how it's normally been. So thank you for watching. Leave a like on the stream and I'll see you Monday. Bye.